So, good morning. I am Lakshmi Patay MG, Assistant Professor of Commerce, Government First Grade College, Madhugiri, Tumkur District. My title is Financial Accounting 2. Now, I am discussing about the session number 46, that is chapter name Branch Accounting. The topic covered under this session, that is methods of branch accounting and supply of goods at cost price and invoice price. What are the methods of accounting? The accounts of the dependent branches are maintained by the head office at the end of every accounting period. The head office ascertains the results of the branch under one of the following methods or systems of accounting. So, what are the methods of branch accounting system? The first one is debtor system, final account system, and stock and debtors system. The head office has the option to adopt any of these systems. However, the results under any of the systems would be the same. What is debtor system? Under this system, the head office treats the branch office as a debtor. At the end of the accounting period, the head office prepares a branch account to ascertain the profit or loss of the branch. The assets and liabilities of the branch at the beginning of the accounting period is treated as given by the head office, and those at the end of the year is treated as returned by the branch to the head office. The branch account is prepared by the head office for ascertaining the results of the branch is dependent upon the two situations, like the one is when the head office sends goods to the branch at cost price, and when the head office sends goods to the branch at inflated price or invoice price, or even it is called a loaded price. Next, so when the head office sends goods to the branch at cost price, the following format of branch account in this case. So in the books of head office, branch account for the year ended. So on coming to the debit side, first we are entering opening assets, That is opening stock at branch, opening debtors at branch, opening petty cash at branch. To opening furniture at branch, to opening prepaid expenses at branch, like so that. So with the value of the assets at the branch at the beginning of the accounting period, we are entering under the head opening assets. Opposite, opening liabilities. Opening creditors at branch, opening outstanding expenses at branch. So with the value of the liabilities at the branch at the beginning of the accounting period, we are entering. And next, credit side by bank account. So with the remittance made by the branch to the head office out of collections from debtors, cash sales and other receipts are entering on credit side under the heading by bank account. Next. Come to debit side, second point, to goods sent to branch account with cost price of goods sent by head office to branch. At what price of goods sent by the branch we are entering this heading. And come to the credit side, by goods sent to branch account. With the cost price of goods returned by branch to head office are mentioned. If any returns, crediting the goods sent to branch account. If any receipts, debiting the goods sent to branch account. Come to debit side, to bank account. With the amount of branch expenses met by head office. And debit side, to closing liabilities, that is with the value of liability at the end of the accounting period, that is closing creditors at branch, closing outstanding expenses at branch. And come to us credit side, by closing assets account. That is closing stock at branch, closing debtors at branch, closing petty cash at branch, closing furniture at branch, closing prepaid expenses at branch, like so on. So with the value of the assets at the branch at the end of the accounting period, we are entering. So first we debit the opening assets, debit the goods sent to branch account, debit the bank account, debit the closing liability, and credit the opening liability, credit the bank, credit the goods sent to bank account, and credit the closing assets. Then the difference is called. So if the credit side total is more and the debit side total is less, the difference is treated as profit. Suppose the debit side total is more than the credit side total, the difference is treated as loss. And if any profit, that profit is debited to general P&L account, and if any loss, credited to general P&L account, general profit and loss account. So apart from the above items, no other items must be shown in the branch account. So the value of fixed assets at the end of the accounting period must be shown after adjusting the depreciation. For ascertaining any missing information about branch debtors like opening balance of debtors or collection from debtors or closing balance of debtors, a memorandum debtors accounts must be prepared. For ascertaining any missing information about branch creditors like opening balance of creditors, payment to creditors or closing balance of creditors, a memorandum creditors account must be prepared. For ascertaining any missing information about branch bills receivable like opening balance of BR or collection from BR or closing balance of BR, a memorandum bills receivable account must be prepared. For ascertaining any missing information about branch BP like opening balance of BP, payment to BP or closing balance of BP, a memorandum bills payable account must be prepared. For ascertaining any missing information about branch cash and bank balance like opening bank balance or collection and remittance of the branch or closing bank balance, a memorandum cash or bank account must be prepared. So these memorandum debtors account, memorandum creditors account, memorandum bills receivable and memorandum bills payable account are discussed in the chapter conversion of single entry into double entry system. So more informations are provided in the conversion of single entry system into double entry system. Next, when the head office sends goods to the branch at inflated price. So for the purpose of maintaining confidentiality about its profit margin, head office sends goods to the branch at price above the cost price. Price above the cost price. Such price is called loaded or invoice price. Loaded or invoice price. While ascertaining the results of the branch at the end of the year, such loaded price, that is the difference between the invoice price or inflated price and the cost price, must be adjusted. Okay. So what are the objectives of supplying goods at invoice price? To maintain the secrecy of profit earned by the branch, to have effective control over the stock. Load will be included in 4 items shown in branch account, namely, that is opening stock of goods at the branch, goods sent to branch, goods returned by branch, and closing stock of goods at the branch. So load would be normally a percentage of cost, since all the above items are at the loaded price. The load as a percentage of cost must be converted into load as a percentage of invoice price. For example, if the load is 25% on cost, assuming cost is equal to 100, the load will be 25 and invoice price will be rupees 125. That is 100 plus 25. So the load as a percentage of invoice price would be 20%, that is 25 divided by 125 into 100 is equal to 20. So when the head office sends goods to the branch at invoice price or inflated price, the following format will be prepared. So in debit side, we are entering the opening assets, that is with the value of assets at the branch at the beginning of the accounting period, that is opening stock at branch, opening debtors at branch, opening petty cash at branch, etc. And opposite, credit the opening liabilities. So with the value of the liabilities at the branch at the beginning of the accounting period are mentioned, that is opening creditors at branch, opening outstanding expenses at branch. And come to the debit side, credit side, by bank account. If any remittances, with the remittance, cash sales are collected from debtors. With the remittance made by the branch to the head office, out of collections from debtors, cash sales and other receipts. Come to the debit side, to goods sent to the branch with the invoice, with the value of the goods, with the invoice price of the goods sent by the head office to branch. And again, goods sent to branch account with load included in the goods returned by the branch. This mistake. And again, debiting bank account with the amount of branch expenses met by the head office, and to closing liabilities, that is closing debtors at branch, closing outstanding expenses at branch. Credit side, by crediting goods sent to branch with the invoice price of goods returned by the branch to head office. By closing assets, closing stock at branch, closing debtors at branch, closing petty cash at branch, closing furniture at branch, closing prepaid expenses at branch. And finally, it is very, very, very important. Come to the debit side, to stock reserve account with the load included in the closing stock of the branch. By stock reserve account, by load price in opening stock. Debit side, to goods sent to branch account, load price in goods returned by the branch. By goods sent to branch, that is load price in goods sent to branch. These are the loaded price. This loaded price will be included these only 4 items: opening stock of the goods of the branch, closing stock of the goods of the branch, and goods coming from head office to branch, and goods returned from branch to head office. Only these 4 items are included for applying the loaded price. And next one, final account system of our branch trading and profit and loss account method. Under this system, the head office prepares a memorandum branch trading and profit and loss account to ascertain the results of the branch. The branch trading and profit and loss account is prepared in the books of head office, not as part of double entry system, but outside the books as a memorandum basis. So following is the format of memorandum branch trading and profit and loss account in the books of head office branch account. We debit the opening stock at branch. We debit the goods sent to branch from head office less returns from branch. To debit the purchases made by the branches directly, if it is cash credit, we are entering. We debit the direct expenses of the branch and credit the sales of the branch cash and credit by crediting the closing stock at the branch, and the difference is called the credit side total is more than the debit side, we get balancing figure is the gross profit, and debit side total is more and the credit side total is less, so we get the balancing figure is treated as gross loss, and gross profit must be brought down to P&L account and gross loss to be brought down to P&L account debit side. So debit side come to the P&L account debit side. Next, by gross profit brought down or gross loss brought down to expenses of the branch, to bad debts, to depreciation on fixed assets, to discount allowed. These are the expenses relating to profit and loss account. And the credit side total is more than the debit side total. The difference is called profit. That profit to be transferred to general profit and loss account. Okay, next. So in this session we are discussing about the accounts of dependent branches are maintained by the head office under the following methods. Debtor system, when the head office sends goods to the branch at cost price, when the head office sends goods to the branch at inflated price or invoice price, and also to know the final account system, stock and debtors account system. So these are the references. Thank you.